region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Why, hello, good morning, and welcome, everyone. It is Monday, June 8th, and this is the AgYield War Room. I, of course, am AgYield's marketing manager, everyone's favorite backup host, and potentially going back through puberty all over again, given the state of my voice, Jack Coakley. For those of you that want to join the discussion, please feel free to do so. Leave us a comment anywhere you see fit, and we're always answering your questions and comments at info@agyield.com. Let's send it over to Brian with some overnight numbers.
All right, thanks, Jack. Yeah, I opened up a little bit friendly to start tonight, but the weakness continues here. July corn down 2 at 415.5. July beans down 3 1/4 at 1118 1/4, and July Chicago wheat 579.5 down 1/2. So we'll see what the day brings.
All right, thanks, Brian. Dustin, everything I've seen from the show and from what I'm hearing from you guys, everything's paradise here, and everyone's super happy. And there's really no problems. So, yeah, what do you got to say?
Yeah, that's unfortunately, that'd be nice to say right now. I think for grain farmers, you know, there's a little bit of a shock happening, obviously, with the price of corn falling. If you haven't been following it, you know, this is the chart of July corn. One of the most brutal sell-offs that we've seen, like, ever, but let alone it being, you know, right at the early part of June, you know, prior to really getting into the growing season, seeing what we're going to have for pollination weather yet. Weather has been fairly benign, but as you can see, like, you know, we're off the high by, you know, almost, you know, we're pushing up into the high 480s, and last night we were trading down as low as 412. So what is the reason behind it? I think that there's a lot of, you know, speculative funds that had flown into grains, and what we saw last week is, you know, that they're drawing that down very fast. Managed money funds have taken a lot of their length out of the market, and that was as of Tuesday. Right, so I think there's probably a good chance that they're back to, you know, close to neutral by now on their positioning. And you know, what drives their decision making? I guess there's not a lot of fresh news in that time frame, in my opinion, to justify this. It's just these are massive positioning, and when they're getting out, they're getting out. So, in my opinion, I think it's gotten a little overdone, but we'll have to just see how the rest of this month goes. We have to probably at this point see some sort of adverse weather in the forecast to get things exciting again.
Thanks for that, Dustin. Yeah, I'm extra sad because one of our super fans, Nick Fry, once told me, and I can't corroborate this, I don't know if this is correct, that the markets are up on days where I host the show, and it's looking like maybe this is the end of that winning streak for me. Anyway, Ben, what's going on in your mind?
I'm willing to try it. If you hosting the show will get us higher, I think it's an okay risk from our end. You know, the market on downside has definitely exceeded where I thought it would hold by quite a bit. Liquidation. It's been a violent break, and you know, I'm just going to go back to a conversation with a customer. And he was fairly well marketed, very happy with where he said. He said, "What do we do now?" I said, "I don't think you do anything." And I'm like, "You've got fantastic insurance. You beefed up on that. You've got great farm bill, and you've got enough soul that you're actually going to make more money in a break from here than a shallow rally. So I think you're just patient here for a bit." I know it doesn't fit everyone, but it fits a lot of people. And I think it's a really good narrative on why you market for revenue, not direction. And this was an example where they gave us an opportunity to step into some pretty agreeable hedging opportunities, despite all of extremely bullish narrative around corn. Especially coming out of 2 years of doldrums. And we get not just a rug pull, but we get a rug pull and rug out the window pull. So I think you let it do what it wants to do here. There's still plenty of risk. I'm reading some articles about, we tend to talk in terms of risk premium in commodity markets. And there's I thought, a well-written article about risk reduction. And that's from fear of headlines, fear of things that are coming out of how whippy these markets can be. But I do think that the bull is injured enough that rallies will be short-lived for a while, pops, until something changes. There's been a lot of steamrolling on this break, and I'm sure there's a lot of positions yet to be reconciled, and probably a fair amount on 10 to 15 cent rallies if they materialize. And Jack, we're putting all that pressure on you today.
I'm gonna do my best. I'm gonna send a positive mojo out into the universe. Justin, let's shoot it over to you.
Yeah. We've talked a lot on this show about volatility is going to be here, this growing season this summer. I think so far it's been more than anyone would have anticipated. But, these, as Dustin kind of alluded to, these are, bulls in a china shop, big money sloshing around. Look at what I keep going back to, these are the same kind of funds that are in equities, and you see these massive stocks move 10, 20, 30% in a day. And so, I think these kind of moves in our markets are going to be more common when they're involved. So, the only thing I know is that you have to be super disciplined, which is way easier said than done, on how it affects your farm. I'm of the opinion that last night, our target, I think 440 and below in D's corn. A lot of, most people start making more money than it going up. So I think we're very, very close. It's like we said, it's like catching a falling knife. As a trader, to just go buy it, I think is much different than a farmer with all the tools that they have. I think 440 and below is a buying opportunity, personally. Now, again, if a trader, it's a different story, and we could go much lower, but I'm just talking about the dynamics of, crop insurance, farm bill, hedges, all those kinds of things. So, and when you have to move an incredible amount of contracts from a speculator, you have to go to levels where it's super, attractive for buyers, right? So we saw it at, call it $4.80 to $5, right? When they had to get in, that was a level that we hadn't seen in a couple of years and attract a lot of selling from farmers. Big change of ownership, and now we're trying to find the level where to accommodate another 300,000 contracts sold, right? So these are massive changes of ownership in a short amount of time. So yeah, you have to go to extremes to accommodate that value, where you have enough buyers willing to exchange that. So I think we're getting there. I would say the funds are flat to short in corn. The soybean complex probably has quite a bit more risk. But we'll see. You still have, we had some flash sales today, right? We're starting to sell some stuff. I think everybody in the market's just shocked at how fast it moved. This was one of the biggest 1 week percentage moves in history, ever. So, everyone's, I think, just trying to figure out what the hell just happened. So from our perspective, just look at I thought if we got down to 440 at some time, I was actually thinking pre-harvest, we'd be covering hedges and doing things. That happened in June. So personally, I welcome the move, because I think it creates, you can kind of reset and restructure yourself to take advantage of. We might have another 2 or 3 of these kind of big undulating moves this year. So you got to be kind of nimble, and you got to have your points. And I hate to say the word trade it, but it is really trading it, because you do have a position on with crop insurance and farm bill and hedges and all those things. So I think you do have to kind of trade this market in that sense around your hedges.
Yeah, thanks for that, Justin. Anything else, guys, before we shoot over to livestock?
I would just say that we are what's really interesting to me about this sell-off is it's really not on any like clear fundamental news, right? Like that's the part that I think is pretty wild about this. Like, can anyone exactly say like what exactly is the conviction to do this other than positioning, right?
Well, I
Like,
would say, I mean, my thought on that, Dustin, is that we probably got higher than we should have been because of all the hype on China trade deal, crude oil, Strait of Hormuz. Like we threw a lot at this market, right? Commodity cycles, super El Nino. I mean, there was a lot going in to push prices where they were coming off
Yeah.
of, like, let's take corn, for example. I mean, we came off of almost record acres and way over record yield, massive supply.
yeah,
And we fought through all of that and pushed it to multi-year highs. So we probably just got, it pushed us higher than we should have. And now we're pushing it. Just my opinion, we're pushing it lower than we should have, than we should. Right. So I think the sell-off was too many speculators, too many,
Yes.
Too much hype, too much, just look at like some of these, like we were talking about, South Korea stock index, got halted last night, down 8.5%. Right. Wild speculation, chip stocks, all these things like euphoria. I mean, some of these stocks, Dell, right, doubled, tripled. I mean, some stock that's been around forever in a short amount of time. And it's like, I just think there's just too much money sloshing around chasing things. And for us to try to put a fundamental reasoning to your point, I think is silly.
Yeah. So there was no headline, right? That's the point. It was positioning. They were over positioned one way, and then the too many people on one side of the ship tipped it over the other way.
You just didn't have enough headlines to follow it, right? Like to get the next buyer.
Yeah. So price discovery, right? Like price discovery seems very messy right now. And when you think about the fundamental backdrop, like rising fertilizer prices, global concerns for future production, I still think, the reasons you're talking about trading it, right? Like getting to the right balance based on those things, there's still a reason to do that, especially the fact that it's June 8th and, we won't really know the important forecast for a month. So,
yeah.
Hold on, I'm back. Got a comment from Vincent. I believe I'm saying that right. With a large Brazilian crop expected this year, is this something we have to think about regarding corn? Do we have to see what happens on the 11th of June, which I imagine is the WASDE report? I don't know. I'm not a consultant. I'm just the guy who hosts the show. But Dustin, what do you think?
Yeah, I mean, Brazil's weather has turned better in that time frame. That could definitely help explain a lot of this. That like we are gonna have a safrinha crop to compete with. But it wasn't like the perfect setup necessarily. So,
yeah, I mean, to that point, I mean, it's just, when we have big rallies, we forget about the bigger backdrop. In my opinion, is that Brazil just continues to expand, right? And so it's going to sound bad, but one of the exciting parts of this was that Brazil was getting hurt worse than us when it comes to input pricing. Right there, we may have seen one of the first, real big pain points for Brazil when it came, because they're such a big importer, way more so than us. So when global inputs get really, really high, it hurts them more than us, even though it still hurts us. So, did we slow down that expansion some degree? I don't think we'll know yet. Now, I would say I think urea prices are back to pre-war levels, in the Gulf. So we have seen urea prices come down dramatically, even though the Strait of Hormuz is, still basically shut. We have seen those prices come down. Now, maybe that's just because of timing and, enough got priced and whatever. But I think that risk is still out there. So we'll see. But so far, Brazil expands every year regardless. And at a pace that, China, who has been the big, increase in demand in previous years, has really flatlined. So that that overhanging risk is still always there. So without a U.S. Weather problem, without a South American weather problem, we still have to contend with that. Now, I will say on the flip side, things like ethanol has expanded dramatically in Brazil, right? So I think even like we'll take last year's safrinha crop. I was waiting the whole time for our exports to drop off, our commitments to drop off on exports, and we continue to hit record numbers. I think a lot of that is because the ethanol base is built so big, has gained so much down in Brazil that that industry is picking up dramatically. So we were at low prices for a long period of time, and we did build a huge demand base. So just trying to counter my other point about production continue to increase. We have seen a huge increase in demand globally, with biodiesel, with renewables, it not just in the US, but in a lot of other countries. So it is, I think we did kind of come to parity a little bit on supply and demand. We got maybe a little too high for a second and got funds too extended. And I think we're probably breaking back down to prices where supply and demand are getting close to being equal again. So, time will tell.
Yeah, great stuff, guys. Thanks for that, Justin. Ryland, very briefly, let's go over to livestock. What's going on?
Well, another case of screwworm popped up here in Texas. I don't think that's a shock to anybody that now it's officially over the border. Obviously, it's some pretty interesting price action on Friday. You had a nice technical follow through, new highs for the move. Kind of capitalizing on the reversal from the previous session. And it's just a matter of how are we going to kind of skin this cat, as far as screwworm goes. It seems like the market's going to see these headlines as generally supportive, especially with, the restrictions in movement. Anything that gets landed in a 20-kilometer quarantine zone, it just feels like it's taking potentially a seller out of the market. So I think that's the way the market's going to view it for right now, as more and more of these cases pop up. But it's also how the USDA is going to handle treatment and further guidelines, with all these cases. So I think in general, I mean, the big worry I think that the market's going to have down the road is that there's a public perception problem with what this actually means as these cases spread in the US. Hopefully we can contain it sooner rather than later, but I mean, I do think that is eventually going to be a problem. Who knows when that starts to shape up, but I'm sure the market will feel it at some point. But right now, I mean, we're not seeing any kind of any change on the cash side of the market. Cash is still staying really firm. We saw 257 trade here on Friday. That was generally steady with last week. I mean, on the feeder side, we've seen auction markets trying to take a dip here, but otherwise the board's starting to creep back up here. I mean, we're coming into a first notice day here on the June contract on the live market here today. So we'll see if that basis really starts to tighten up a little bit. I mean, we've already eliminated quite a bit, shrunk a little bit, but still has quite a ways to go. So I think in general, it's more of a supportive factor to the futures at this point. So once again, we'll kind of see, we'll kind of dish out the news as it comes out here. But realistically, I'm just on a personal note, I ate like 7 burgers this weekend at a baseball tournament. So I don't think it's really going to have that big of a, impact on demand anytime soon. That's just a personal thought. So we shall see. I know nobody was thinking screwworm this weekend. They were just dying of hunger, so hammering these burgers. Anywho, hog side of things just cannot buy any support here. I mean, I think just overall the market's really waiting to see bellies kind of take off. We are starting to see a little bit of support here in the cash market. We just need to see that hold up here. I mean, it seems like we're starting to see Iowa, Minnesota start to creep up a little bit, but overall it just feels like other regions still may be a little bit on the weaker side. So we did see bellies down another $4, and managed money at this point sold 12,000 more contracts the previous week. It just seems like the bloom is off the rose here on the pork side of the business for the long funds, and likely here building up a short position into a strange time when we usually see better demand sentiment. So a little bit contra seasonal. I think that's where the big fear is. And at this point, it just feels like maybe we can drum up a little bit more demand, but we need to see cash and carcass start to follow here.
Thank you for that, Rylan. Looks like we just hit the open. Brian, what was it looking like out there?
Your streak looking not too good right now. We got July corn down 3 at 414.5. July beans down 5 1/4, 11.16 1/4. And you had a fighting chance with wheat was up, 2 at one point, but Rylan talked too long, and now we're down 3/4 at 5.79 1/4.
Sorry, guys. I meant to hold that wheat market up.
Nick, I'm sorry if you're watching today. Anyway, feel free to shoot us a like or subscribe. Helps us out with the YouTube algorithms, helps us get our show out to a wider audience. We appreciate everyone that tunes in on a daily basis to confirm that my winning streak is now over. Again, sorry, Nick. War Room Report, effectively what you got here today on steroids. More discussion, members-only videos, members-only newsletters, and more. So be sure to check that out. Link is in the description. A portion of those subscription fees help to support the AgYield NextGen Foundation. We just wrapped up our national scholarship competition. We got 5 college kids that we are awarding scholarships to later this summer. It should be a lot of fun. Dan will be back tomorrow. I hope everyone has a great day, and we look forward to talking to you again soon.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.